According to an economist, Dr. Yoteriba, foreign reserve adequacy is critical for Nigeria's economic stability. Countries with significant foreign reserves have buffers to withstand global economic shocks. You're welcome to the Economy and Politics Conversation. I'm Ottoabasi, Abasiekong. This edition will discuss assessing Nigeria's foreign exchange market stability and liquidity. Joining me virtually for this conversation is Mr. Yinka Ogunnubi, President, Association of Corporate Treasurers of Nigeria. It's nice to have you on the program.
Thanks for having me, my brother. Good to be here.
Yes, and at least first time having you for this year. Quite an impactful year already. Yes.
Yeah.
And of course, the economist I referenced was the keynote speaker at your Outlook Forum.
Exactly, yeah.
All right. So let's begin by getting your assessment of activities in the Nigerian foreign exchange market in the first quarter of 2025. We know that November last year, the central bank governor, Mr. Yinka, also talked about the foreign exchange code, that's the FX matching system coming into play. How has that panned out, and what other developments stood out for first quarter of 2025?
Okay, it has been an interesting quarter. I would take my assessment starting from December 1st, 2024, when the electronic foreign exchange matching system was put in place. That has been a significant differentiator in the market because it brought market transparency and a lot of controls. It removed a lot of all the systemic challenges that we had. And so what you saw immediately after was this surge of the naira, because we could see clearly from the market that there was enough supply. And so we saw that shift. And for most of us in the industry, we had always been conversing for having some relative level of data for us to be able to analyze and say that, to be able to make a definite statement to say, is the naira stable or not? The challenge we've been having is that we've not had enough data to be able to do that. And for now, we've had consistent 120 days plus data for us to be able to give an assessment. So I would say that specific to Q1, it has been very interesting. We've seen that the market can take all demands, and I'm specific about that. The market can take all demands. There's no instance right now of any particular demand going to the market could not take. We've seen the CBN coming in at some point to participate in the market, not on the supply side, but on the demand side. CBN is actually coming in to buy some of the excess liquidity that we see in the market. And we see them intervening not to feed the appreciation of the naira, but basically to stabilize the naira. And that's what we've always been saying, that volatility is on both sides. If the naira is appreciating fast, it's still volatile. And so we see CBN coming in to ensure that rates stayed within a certain region. So I would say that, while there's still a bit of volatility, when you measure volatility between before and after, you'll see that the market is a lot more stable and friendly right now.
Markets are a lot more stable and predictable for the industry, which is really remarkable. And yes, economists have been calling for it, analysts have been calling for it, even the international agencies like the International Monetary Fund have been requesting for this. And the Central Bank of Nigeria recently released the net foreign reserves position for the country. We now know that it's $23.1 billion at the end of 2024, the highest in over 3 years, and a significant increase from $4 billion at the end of 2023. How has this disclosure boosted confidence in the markets?
Enormously. There were many of us who were actually shocked that we had that much coming from the CBN, especially when you draw back and you look at the fact that in 2024 the CBN cleared, well, according to them, 7 billion of debt obligations, interest on obligations, and all that kind of stuff. And somewhere estimated around the 10 $10 billion. So in a way, when you put all that together, and then you now see that they are reporting 23 billion as net reserves, it shows how much we've done and how much that of forex inflow that we have seen. So I think that in terms of confidence building, it's good. It's what we want to see. It's a good step forward. I would also like to add that an additional boost for confidence, if we can get back on the JP Morgan Emerging Economy Index, I think that will also help, to really boost confidence. But as far as confidence is concerned, given the numbers that we see, it's encouraging.
Very encouraging, yes. And of course, Mr. Yinka, you're conversant with what's happening. We anticipated this when President Donald Trump was sworn in from January.
We had this conversation. Yeah.
Yes,
we had this conversation. Yeah.
Last time we had the conversation. So it's really happened. He's pushed to what he said. The tariff is really the big news across the world. And of course, just getting the fact that there's a 90-day pause on the tariffs.
Yes.
Excluding China, where we see the real battle going on. But how has this impacted Nigeria's foreign exchange market and economy? We know that the Federal Ministry of Industry and Investment said about $6 billion worth of exports to U.S. happened. This will affect it. And discussing with a member of the economic management team, they've been meeting to reflect on how this will impact the Nigerian economy. They say they're studying the situation. But for you, you've also talked about the CBN intervening initially by $107 million. We don't know how this will if this will continue, but for your perspective, what's the impact like on the FX market and economy?
I think we've seen the immediate impact on the FX market. When you look at the last 7 days, the tariff was announced on the 2nd of April, I think.
Yes, Liberation Day.
Yes. And we saw the immediate impact on the FX market. I think within 7 days, the Naira depreciated by 5 to 6%. And it got a lot of people concerned.
Yeah.
And, my immediate reaction to that conversation that I've had privately is that people also need to understand that Nigeria doesn't exist in a vacuum. Nigeria exists within a global economy. And so you cannot see something happening in the West, in New York, in London, and some of these places, and you think that it will affect Nigeria. Yes. We've seen stock market crashes. We've seen bond market, going haywire because of what China is doing. We've seen oil prices losing, I think about $10. So there's no way all this will happen that it will not have triggers on our own local environment, where we have a lot of portfolio investors coming in over the last 1 year. Some of these people have triggers that will immediately set off, and these things have impact in the local economy. So I think that that's what we have seen so far. Within the treasurers community, we've had conversations with ourselves, and part of the conversations has been that people should be able to put all this in perspective, in trying to understand how to react. But if you're looking at have we seen some has it affected our market? Yeah, I mean, has it affected us? Yes. Do we know how far it's going to affect us? Not really, but we have a fair idea of the extent to which we can be exposed. For instance, I would say that our level of exposure is lower than what you will see in South Africa and Egypt, because and sometimes you just have to look at the numbers.
Yes.
South Africa, for instance, the rand depreciated against the dollar by 7%. We are talking 5% in Nigeria. Egypt, the Egyptian pound depreciated close to like 4% as well. So, and when you look at the level of our exposure, their own exposure to FDIs is much higher than we are. And then in terms of trade, I would be more concerned if we're talking tariffs between Nigeria and China, not Nigeria and the US. Yes, the US is purchasing close to about $5.7 billion. Most of it is oil and gas. And so the concern I have with that is that if the US stop purchasing less oil and gas, how would that impact FX? So those are the concerns that I have, and it's just something for us to look at. But I don't think that it has risen to the level where we should panic.
Yeah. There's no reason to the level where we should panic, like you rightly said, because one of the major panics is the crude oil price being below the estimate of the government's budget, $75 per barrel, around $60, and so that is like already a shortfall. So those are the issues that we'll be tracking, how that will impact the economy. But let's look at how businesses, you talked about your community, the treasurers, but how should business position for the year amidst the concerns of foreign exchange volatility and the issues around the tariffs and the various geopolitical risk and geoeconomic risk? How should businesses position this period?
This is the second time you're asking me this question. And I don't know whether you have.
We asked last
you asked
time,
the same.
Yes.
And I'm just going to give you the same answer I gave last time. Number one, companies need to they need to calm down. They don't need to panic.
Okay.
It's tariff now. What is it going to be next week? You don't know. So one thing you do know is that with what's going on with the US, there's a whole lot of uncertainty. But then we're beginning to see some sense to this uncertainty. We are beginning to understand that there seems to be a deliberate policy to disrupt and cause some level of chaos, and then come in to try to resolve it with this pause thing that they keep doing. So I think businesses need to take a step back, and I'll give you an example of what happened within this few weeks with the depreciation of the naira. When this happened, in fact, we got to the point where the official rate was trading higher than the parallel market rate, and then the tendency you immediately saw was that a lot of corporates wanted to go into, in fact, they did go into the parallel market. And then what happened again? The parallel market spiked, repriced higher than the official market. And one thing we did among ourselves was to try to just have that conversation to say, hey, let's not go back into the previous behavior of panicking and then pulling a lot of demand into the market. In reality, even if you're talking about that demand, the CBN has so much mopped up a lot of naira that it's even very difficult to be able to push a lot of all this naira in. So I think the first thing really is step back, have a 360-degree look at what it is. What is your exposure to America? The first question you have to ask is, what's your exposure to America? In your supply chain, how much of your imports is linked to America? When you're able to assess that, you then begin to look at what are the alternatives. Can I source my raw materials from elsewhere? Can I, look at other possibilities? Because as of today, countries all over the world are realigning themselves. They are realizing that America is no longer a reliable partner, at least in the short term, and so you have to look elsewhere to see where the benefits are. So my advice would definitely be don't panic, assess the market very well, look at where your risks are, and then with a very conscious decision, deliberate decision, make your business decisions, and don't panic.
Don't panic. Assess the exposure, and of course, be strategic. Now, what should fiscal and monetary policy steps? What fiscal and monetary steps are required at this time to support our foreign exchange stability and liquidity in Nigeria? I just want to run through some developments now. Our current external reserves is $38.3 billion. You talked about South Africa and Egypt. If you look at South Africa, it's $63.2 billion. Egypt is $47.8 billion. We still need to boost foreign reserve adequacy. And then, of course, balance of payments, the latest released by Central Bank of Nigeria, we had a surplus of $6.83 billion for 2024 full year. Shows some improvement.
Yeah.
But generally, what steps should be taken at this time?
I think the CBN is doing a lot. There's little that I want to ask the CBN to do more than what they're already doing. I think that they've done enough. They've put in all these restrictions in the market to restrict the amount of naira that can be used to purchase FX and all that. They've increased rates. They've done a lot, and we've seen that because of what they've done, especially on the transparency side, it's boosted a lot of inflows of FX. There's very little places you can go to in the world today where you can get the kind of returns you're getting in Nigeria. Mm-hmm. So whichever way you look at it, Nigeria will always be very attractive to all these portfolio investors. Mm-hmm. However, where we want to be is not all this short-term hot money is coming in.
Yeah.
We want to be at the long-term part of it. Yes. People who are coming here to invest for the long term. We want to get back to the 2020, 2011 period where we're having enormous investment capital coming in. That's where we want to be. And that's where, when you think about it, it's not the CBN that is going to boost that. It's really on the fiscal side. Our ease of doing business, our policies, and all that. So this is where the government must really step up. I am not necessarily impressed with our non-oil foreign exchange revenues. I think that by now we should have boosted that. It will really be in our interest to pursue that. So I think the fiscal authorities also have to look into that. I mean, to be honest with you, it's not necessarily now is not a time where your currency should be strong. To be honest with you, your currency, a weak currency is not really bad at this time if you are pushing exports. And so we really need to look at the non-oil, sectors as a way to boost income away from the oil sector, and also see how we can support businesses with infrastructure and all that. I think that if we get that right, we will be in a better position to take advantage of what's currently going on. But it's not all that bad. So let's give the CBN its credit. The fiscal authorities are also doing their best, but they really need to be able to match up a lot of all their policies to increase foreign direct investment into the country that is long term, that capital that is not hot money that is flying, but that we will be able to invest for the long term.
Very well. If I get sense of what you said, we need a very robust investment policy that leverages our assets, turns our assets to wealth. It's time to turn our assets to wealth, state-owned enterprises to wealth too, and list some of them so we can attract foreign direct investments for growth and sustainability. Very well said, Mr. Yinka Ogunnubi. Thank you very much, Mr. Yinka Ogunnubi, President, Association of Corporate Treasurers of Nigeria, for this interesting conversation as we assess Nigeria's foreign exchange market stability and liquidity position. Very, very interesting conversation we've had. And of course, you said there's predictability, stability, but we need that synergy in policy to ensure that we're attracting foreign direct investment and boosting our reserves and the inflows, and also non-oil export revenue. Thank you once again for the time.
Thanks for having me.
And I wish your club all the best. This week, we're playing the second leg against Real Madrid. Let's see if Arsenal can make it this time And
we would.
Pinch
We would. Don't worry.
That would be a big one because the club has elite fans across the world. So it'd be interesting to see how you
We would. Thank you.
All right. Thank you. Thank you for your time. To our viewers, if you want to get further insights on this conversation, visit the ProShare website displayed on the screen and follow our social media platforms to engage further, particularly our FX tracker every working day. We have it there at the close of market day. Until we come your way again, enrich yourself with knowledge of socioeconomic developments around you. It is wise. I'm Ottoabasi. Thank you for watching and bye for now.